Investors, traders, and subscribers, welcome to the channel Market Chart Pattern. Today we'll be taking a look at the major US stock indices. This video is for educational purposes only and it is not a financial advice. So this is going to be a short video because in the video which was done previously, we went through the key levels and the patterns and the cycles that we have been watching. And in this video, we're just going to go through the last couple of days trading session and the price action and what we think might be happening. So guys, in the video which was done previously, I highly encourage you to watch that video because that is going to go in a bit more detail about the cycles and these ABCDs that we have been following. So you see two one-to-one projections, or what we like to call ABCD. One is in green and the other one is in this maroon color. So what we believe is that we are in this ABCD cycle. In fact, we believe that we might be in this bigger one, which is in the maroon color, which could actually see us go to as high as 41.72. And of course, there is some resistance around the 78.6% Fibonacci retracement. And then we also have the smaller one, which is this green color one. The ABC takes us to 41.10, and the 78.6% Fibonacci retracement is around 41.30. So that's kind of our near-term target. However, what is really important to also watch is this level of 40.65 in this brown line over here, because that's the candle from 22nd of March. I believe Fed was out that day and we had a real strong close to the downside. However, there has not been a follow through. So if the price is able to take it out decisively, we like to look at two consecutive daily closes. Then these levels that we have mentioned, they become more easily achievable. And this one, the bigger ABCD that we are looking at, that will take us right into this top formation, which has been a pretty strong resistance if you go back to 13th of September 2022, in fact. So it'll be a real test if the market will be strong enough to actually take this out or not. And if it is able to take this out, then we also have some other cycles that we can take a look at, and perhaps there might be a bigger cycle which is pushing the prices higher. And on a weekly basis, we'll do a longer term weekly chart analysis. And although we could be seeing this cycle pushing the prices higher, but it could also be in an overall context of a bear market. So guys, this is what we are watching in the ES. Let's take a look at these small caps. Russell 2000. So this has been a really hammered hard because the small caps, ever since this banking crisis started, there have been a number of those regional bank stocks in this index, and this really actually it went lower than the 20th of December 2022 low. But it seems to be holding relatively better, and 38.2% Fibonacci retracement around 1795 is just a stone's throw away now, and that's going to be a key resistance level. What we believe is that we have this zone here around 1813. That's going to be a resistance level, and the ultimate one that we are watching is this one, 1832 to about 1849. That's the key one that this index needs to take out, and then I believe there's going to be pretty good strength, and what we could see is these highs getting challenged, highs of 6th of March 2023. Let's take a look at the NQs. So guys, the NQs are much stronger. This is kind of the reverse of the situation of 2022, because the NQs were the hardest hit, the tech stocks, the growth stocks, because the interest rates went up so quickly, and we also had a couple of 75 basis points hikes as well. So last year, that's pretty harsh actually. But now, especially with the banking crisis, there is an opinion in the market that Federal Reserve might actually have done its one rate hike and they might be one and done now. That's speculative, and the next meeting for FOMC is gonna be in the month of May, beginning of May. So there's a whole month of April where the data, especially regarding inflation figures, must be watched really, really carefully. Any jobs numbers, inflation, CPI, PPI, the non-farm payroll, all this stuff really needs to be watched really, really carefully to see whether the situation with the inflation is getting elevated or is getting better. But what appears is that we're gonna have one whole month between the next meeting. So here, possibly we could actually achieve the 13,275 level, which we have been watching quite some time. But we do have the 78.6% Fibonacci retracement, which provided resistance on 22nd of March. So that needs to be taken out, and then we can perhaps look to go and see these levels, perhaps even a double top around 13,730 level. All right, guys. So what we're gonna do is finally look at the Dow Jones. So this is the E-mini Dow Jones futures daily chart. So this one only retraced around to 50%. It broke out of this range. We were looking for an ABCD formation to take place here, but that never really materialized. And it broke out of its range. Now it's moving back into the range here. The key resistance level for us to watch is this shaded area, 33,230 to around 33,550 level. That's what we're watching in Dow Jones. So guys, thank you very much for watching the video. A really quick short video, detailed analysis to be watched in the previous video. I'll put a link to that towards the end of this video, so do watch till the end of this video and you'll be able to click to that link if you like our videos, how we analyze the market using pattern recognition and Fibonacci retracements. Then please do subscribe to the channel. If you found this video of educational value, then please do like the video. That way I know that people like the content from an educational perspective, and just encourages me to keep on producing more educational content for you guys. Thank you very much. Good luck and good trading.